The materials and information contained therein are the direct result of the activities of the project SPEED, Social Processes Empowering Entrepreneurship Development, Key Action 2 of the Erasmus Plus program, Capacity Building in the Field of Youth. The project involved 9 partners from 9 different countries of South America and Europe, 7 organizations from Argentina, Bolivia, Colombia, Estonia, Italy, Poland and Spain, and 2 universities from Mexico and Portugal. For more information, please visit speedstrauss.com.
Hello Speedo, how are you? Let's go through financial now. The most reliable way to forecast the future is to try to understand the present. All these steps are fundamental to define a social entrepreneurial project and the analysis to support it. When drawing up a social business plan, it is appropriate to assess the cost effectiveness and the financial feasibility of the different scenarios in order to test, at least on paper, their sustainability from both an economic and financial point of view. Here you have some tools that can help you in the economic and financial assessment. Revenue model, operating cost model, and BIP or BEP. Okay, but what are they? I know what you're thinking now, but let's have a more detailed view of them. Revenue model. The revenue model describes the composition and the determinants of the social enterprise sales revenue. Particularly, it allows consideration to be made on the articulation of revenue sources. It means what will be the sources of revenue, direct correspondence between the sales of the good and the revenue. For example, in your case, you sell a piece of bread and you gain €1, so revenue. Mixed composition of interrelated revenue sources. For example, you sell the bread, then the jam, and you gain money for the combination of the products. The other determinant is articulation of prices. Maximizing turnover is achieved not so much by finding the right price level, but by managing to articulate prices so that different groups of customers pay different prices depending on their price sensitivity. Price customization must be accompanied by a differentiation of what is sold, so as to justify different price levels. Bread of different size, for example, of different ingredients. The other determinant is customer dynamics. The level of turnover, so the level of sales, will also depend on the number of customers, which will mainly depend on investments in communication, word of mouth, customer retention rate. It means the number of customers increase as new customers join and decrease as some customers leave, and it depends also on the customer loyalty. Then customer purchasing behavior, customer loyalty, how much, when they buy, what they buy. For you, Speedo, there is a direct correspondence between the sales of good and the revenue that we can graphically represent through this chart, where P stands for price, Q stands for quantity, and R stands for revenue. As you can see, when the correspondence between sales of goods and revenue is direct, the relation between price and quantity is directly proportional. Now it's time to move on to the operating cost model. The operating costs are divided into variable cost, which are related to actual volumes, i.e. they are linked to the products to be sold, such as raw materials, direct labor. Fixed cost, which are costs linked to production capacity and development, such as rent, utilities, administrative costs, advertising, training, costs that arise aside from the volumes produced. To simplify, the relationship between variable cost and actual volumes and fixed cost can be represented as follows. In the graphic, C stands for costs, Q stands for quantity, VC stands for variable cost, FC stands for fixed cost. As we can see, variable costs increase with quantity, while fixed costs remain constant regardless of quantity. Clearly, we are simplifying. Let's go now to BIP analysis. The BIP analysis is a combination of the revenue model and the operating cost model that allows us to determine the break-even point. The break-even point is the point where a company's revenues equals its cost. The calculation for the break-even point can be done one of two ways. One is to determine the amount of units that need to be sold, and the second one is to determine the amount of sales that need to happen. The break-even point allows a company to know when it or one of its products will start to be profitable. If a business revenue is below the break-even point, then the company is operating at a loss. If it's above, then it's operating at a profit. Graphically, the combination between the two models can be represented as follows. Let's make now some considerations. As we can see from the chart, fixed costs remain constant. Total costs coincide with fixed costs when actual volumes are zero and increase linearly as variable costs increase. Revenues start at zero and increase as volumes increase. The break-even point is the volume where the revenue line crosses the total cost line. Before the break-even point, the social enterprise has an operating loss. Then, after the break-even point, the social enterprise has an operating profit. This allows us to understand whether our value proposition generates value. From a mathematical point of view, the break-even point can be calculated in two ways, in volumes and in turnover. The BIP in volumes is equal to fixed cost divided by price per unit minus variable cost per unit. The BIP in sales, or in turnover, is equal to fixed cost divided by the contribution margin percentage. Where contribution margin percentage is equal to sales price per unit minus variable cost per unit divided by sales price per unit. The BIP in volumes is the number of units that the social enterprise has to produce to have the sales equal to the operating cost, while BIP in sales is the revenue that the social enterprise has to reach to equal the operating costs and starts to be profitable. In budgeting, the BIP analysis is important to carry out a what-if analysis and identify project breaking points when assessing a business plan. The choices made on the business model determine not only revenues and costs, but also financial sources and uses. In determining financial sources, it's important to understand which will be the uses, such as the initial investment in fixed assets, for example machinery, plant, equipment, the legal form we will opt for, the expected growth rate of our sales. Once that we understand which are the uses, it's time to understand which are the financial resources we can access. For example, family and friends, bank, public institute, business incubator, business angels, venture capitalists, crowdfunding, or more. The analysis of revenues, costs, sources, and uses lead to the social business plan budget. The budget in a business plan should have profit and loss that refers revenue and costs, a balance sheet that refers sources and uses, and the cash flow. Profit and loss is equal to revenue minus costs and give us the profit or the loss that the company will have. The balance sheet give us uses and sources have to be the same. Cash flow, the cash flow statement complements the balance sheet and the profit and loss and measures how well a social enterprise manages its cash position, meaning how well the social enterprise generates cash to pay its debt, sources, and funds its operating expenses, costs. When preparing the budget, you could incur in different types of errors. Estimation errors, the most difficult to avoid. To overcross this kind of error, you can simulate different scenarios with different estimates. For example, an optimistic scenario, a realistic one, and the worst one. You should incur in errors of concept. For example, inconsistencies in budget items, uses different from sources. Errors in the degree of detail. The budget must be detailed enough to show all relevant values. Reducing the degree of detail make it more difficult to make forecasts, considering also that a super detailed budget would not be cost effectiveness. Here you find some tips. These are some of the useful tools you can use to have a first evaluation of the profitability of your own social entrepreneurial idea. Keep in mind that the mentioned tools have been simplified for a better understanding. For different social business, you can use different tools, and not all of them always apply to all the business. And remember that to have an accurate financial forecast, you can always ask support to a business consultant. Good job, Speedo! Now you're ready to start your own social enterprise.